Good evening, World Wide Web. Welcome back to my stock channel. This is James with another update. This one's going to be on AMZN.com. Monster company, $129 a share today. We're going to try to establish if that's a good price or a bad price or what the heck is going on with this thing. It's all over the place. It's also up 55% in 6 months, 14% in a year, 52% in 5 years, and from the beginning 143,000%. Good grief. This company is a perpetual non-taxpayer. Lucky for them. They don't earn any money, like ever. Like you go back to the annals of time, and every single year they're showing you a little yuck figure of money. It's either a small loss or a small win. They refuse to show anything on the balance sheet. Every nickel of extra penny that's left at the end of the year in December gets poured into something. Where they're pouring it is very important to help with the future, to know whether they're pouring it into a good place or a bad place. Hopefully they're pouring it into an asset. If they poured it into advertising, it would show up on their balance sheet as a loss. So let's just say hypothetically in 2022, they did $513 billion in revenue. They declared negative $2.72 billion in losses. They can't, maybe they could prepay in December for advertising in January. That might be possible. So they get the benefit of it. But it would still, whatever they bought with the extra money would have been reflected on this quarter. So they'd have to, and they can't hang on to the money, because if they hang on to the money to buy the advertising in January, it'll get declared and they'll have to pay taxes on it. And God knows they don't want to do that. So you look for this money on the balance sheet. You look for an increase in year over year, comparing this year to that year. We went from 469 to 513. That's a $43 billion increase year over year. We also had a 40 billion shift on the lot from a positive to a loss. So I don't really know how to read that, but you'll notice the effects of their winnings, their actual winnings, what they actually took in and made a profit of, and then decided to reinvest in their company. You see that on their very, very beautiful balance sheet. From this quarter, or this year to this year, they went from 420 in assets to 462, so they went up 42 billion. So it's safe to say that if they went up 42 billion on this, and their liabilities went from 282 to 316, that's 30 billion, that this got $10 billion more favorable, is what this, between year over year, it got 10 billion more favorable. You have a little bit more liabilities, you have more than that in gains of assets. So about 10 million moved there. And the revenue increase was 469 to 513, $43 billion. 10 of it moved to the balance sheet, let's just say. 40 of it fell off here. I don't know how much money this company actually makes. That's the thing, is they just make it such a mystery. And if you don't see it on the balance sheet, which I don't, and I don't see it here, which I don't, I can see the growth of the business, but I don't see money that they like sometimes they might make $1 billion here, or I'm sorry, they might make $50 billion on 513, or they might make $20 billion on 513. You'd expect to see that $20 billion show up either on the asset line or by detracting from the liability line, if they are going to do the tax dump at the end of the year, which they clearly do every year to make sure they don't pay taxes. How strange that he would do that. But their balance sheet doesn't reflect such a win. Now, in previous years, it does. You'll notice this one went from 321 to 420. So we went up almost 100 billion year over year from 20 to 21. That was probably a lot of COVID buying. liabilities 227 to 282, so only a maybe a $50 billion jump there. So that was a $50 billion improvement. You could say that in 2020 they probably did make $50 billion, even though they only declared, well, probably practically none of it. Oops, sorry, right here. In 2020, 386 to 469. So they did like 80 million more business. They only called a $21 billion win, when we know it was not only a $21 billion win, but it was another $50 billion win on top of that they put back into themselves by paying off debt or increasing assets. So yeah, this was a big win. This was about 80 million right here. This one I think was less than that. I think this was like a $10 million win that they disguised. And you just have to go through it quarter by quarter, finding the money, finding out where they disguised it. It's really quite a mystery. The stock's trading at $129 a share. Outstanding shares are monstrous, 10.25 billion. So can they bring in 10.25 billion in profit annually? I'd say yeah. I mean, I don't know. It looks like they've done it plenty of times. They've done, oh, we did it again. Sorry, folks. Here we brought in 38 billion in profits. Here we brought in 21 billion in profits. This one was lightly disguised. It could have been 10 billion or so. Yeah, I sense the company is probably undervalued right now. I would say that they can show a much larger profit whenever they want to. They're going to sacrifice some growth for that, probably. Are we at our all-time high? No. We were at 140 before. God, it'd been nice to get this thing for 80 or 90. I hope you got it in one of these pits. But now you're back at 129. What do you do? I don't know. It's still a good deal. Can they pull a buck or two a share out of their hat if they want to? Earnings per share? Absolutely. Can they do it consistently? Absolutely. Would they sacrifice some growth for that? Yep. And what would happen to their price per earnings rate if they did that? They're sitting at a 313 price per earnings rate. That would just crumble as soon as they wow, I didn't think they had that many. That's just ridiculous. 313. If they don't pour every penny of every billion that they make back in to make the chart spike up again to keep this thing at 313, this sucker's coming down to $20 or $10. They just have way too many shares out there. And I don't know if they have any ability to buy them back at 129 each. How do you buy back half of these things? 5 billion of them at that price. Take Amazon 20 years to make that much money to buy back half. That'd be every penny for forever. Market cap 1.33 trillion. Yeah, I think the PE speaks for itself. This thing is it's just overblown. Could they put up a better PE by putting up some earnings, or is the only reason the PE is blown is because they refuse to show earnings? That's probably what it is. Maybe we just need to ignore that price per earnings because they're not going to have any earnings because they make damn sure of it because they don't want to pay taxes. They want to reinvest every penny they can and they want to make it grow. So I guess the game is ignore the PE and go off the raw numbers. If they have 10 billion outstanding shares, they just need to make $10 billion for the year to get to a buck. Maybe they need to make $20 billion for the year to get to $2 earnings per share. And that would certainly justify the value of the company. I don't know. I got it jockeying anywhere from 129, and if the Dow collapses down back to where it was a month ago, maybe back to 90s, high 90s. Could go to 150, could go to 200. Once Mr. Bezos, well, I don't know, if he calms down the growth, he's going to crush his PE, and there goes everything. But I don't know if the PE might not be helped by the price increasing in the stock and them doing better business and putting up better numbers. He hasn't shown numbers to people, and people just accept that, and people kind of figure it out in their head, and they go, yeah, these people could easily do 20, 40, 60, billion if they wanted to. Heck, they're bringing in 513. I'm sure they can irk 10% of that out, or 5%, or 2%, or something that would make earnings substantially huge every single time. So the stockholder would look at a nice earnings per share and take a victory lap, maybe get a dividend. Do they even have a dividend on this thing? I don't think so. This is a growth machine. No dividend. Yep, no dividend. 313, ouch. But that's a dummy number. I guess we can't look at that as being real. The company refuses to show us anything that they're doing. But you can figure it out with the reverse math, looking at the balance sheet and finding out how many assets were added, how many liabilities were added or lost, and you'll figure out what their earnings actually were before they did all those monkey shenanigans on the little dummy chart that we're looking at for the income statement with these little fakes. These are all fakes. Truth is, they probably brought in 30 or 40 million. I'm sorry, 30 or 40 billion. Yeah, they're probably justified in their price pretty strong. I think 129 is about right. If you can get it for better than that, you might want to jump on a few. I don't know how much bigger this thing goes. I mean, good Lord. Have they just grown all year? No, they're starting to peter off a little bit. Look at this. Peter. Oh, we're back up again. And then look what happened to the revenue here. Down to 127 billion, down from 149 billion in one quarter. Maybe this is the Christmas season. Is that what that's all about? That might be it. Maybe it's supposed to do this every year. But let's just say they're tracking 127 or 150. We'll call it 130. Let's see what that compares with this annual. 130 would be 260. It'd be 520. So a slight growth again, maybe for 2023 if this maintains. Looks like they're on track probably to do it, especially when you factor in Christmas. So yeah, I like it at 128. It's just you got to really read between the lines to figure out. And it's such a big company with so many divisions and so many different things that they own. Very difficult to figure out. But also that you can watch the money moving to assess the value and to find out whether they're making or losing money going forwards or backwards. And that's how you do it with Amazon. Thank you so much for watching. Like the video and subscribe to my channel. We'll catch you on the next one. Have a great night.